All right. Hello. Welcome back, everybody, to another episode of the Market Open. It is 9:24 a.m., June 28th, 2023. We're almost done with June, which is kind of crazy to say that we are almost done with June. And I am back in my studio with the bricks, the place I need to be to get the job done. Thank you so much for those who tuned into the Market Open yesterday. I know I was at the hospital. Mom is doing well. Surgery was good. She's back home, having some trouble walking, so it's going to take her a couple of days to get back on her feet. She had knee replacement surgery on both knees. So she's doing well, but I was at the hospital yesterday, and I thought it would be fine. Like, I really thought it would be fine. I stayed there overnight because I was like, oh, the Wi-Fi, like, it's a hospital. It's 2023, and I'm sure the Wi-Fi will be fine. And the Wi-Fi was not fine. So I appreciate you guys keeping up with not the best Market Open, but we're back. We're back here, and we've got a lot to discuss. Joseph, Power Napster, Matt Money, Anthony, Seth Roth, Pete, Ahad, Lars, Eeyore was right, Mike Archelangelo, Mark Blank, Edmund, Benny, Duke Trillions, Philip Rizzo, Ray, Doc Hearing, Bay, Ray, Tess Cap, you are here. Did you get the notification, Tess? Or did you just make sure to be here? That's good. I know it's not been giving you notifications, so this is awesome. Morning Amid, I usually don't talk, but I want to say hi. Stinger 2001, thank you for talking. I appreciate you so much. Thank you for being here. It means the world for me. Dexter, Anthony Johnston, Stefan, Peter Jurt, shout out to Mama Kukraja, AJ, thank you so much. Zach Coles, Joel, Style, CRM, Salesforce, I love it. Bay Ray. All right, we've got a lot to discuss. So, couple things going on that's really interesting right now, and this market might not be the best this morning. Might not, because Nvidia is down, and when Nvidia goes down, everything goes down. Now, the reason Nvidia is down is because the United States, let me share this right here, and then we'll see kind of the implications this has on the rest of the market. Some of the market is up pre-market, but this one is kind of the issue. Nvidia dips on report, U.S. considering new AI chip export restrictions for China. The federal government is weighing restrictions on exporting powerful computing chips to China, the kind that power AI models that the Wall Street Journal reported on Wednesday. This obviously was going to happen, right? The United States does not want to export chips to China that are going to help China train very highly strong and classified and unique AI models. It's, part of the reason that Palantir doesn't work in China, and the United States is kind of recognizing that. And again, this proves the point that Alex Karp has been saying, which is like, hey, we need an edge over our adversaries. And if you give them these chips and you let them train and you don't invest in software, shit's not going to be nice. The restrictions would impact Nvidia and AMD, both of which make powerful processors used in AI applications. The Biden administration has already tightened controls, forcing Nvidia to create a weaker version of its flagship A100 chip for China. But even that weakened chip wouldn't be allowed under the rules of consideration because Nvidia is a boss and they make really good products. So the idea that the Biden administration had to force Nvidia to make lesser quality products to give to China than give to the United States just shows you how incredibly powerful these products are. And in fact, it kind of proves the overall point, again, in terms of the defense race that we're having. When it comes to AI, China's already developing its own ChatGPT OpenAI competitor. So if they have these chips, obviously this wouldn't be good in the context of the United States interests for what's China doing. Nvidia down to 404 from 418. So it's down 3%, and down 3% is about 15 points. Not good for Nvidia. Do I think this is going to be like the worst thing for Nvidia? Obviously not. I mean, this is just one section of their business that they deal with. Now, here's a question for the chat. Curious to hear your take on this. Should Nvidia do business with China? Should Nvidia willingly say, hey, we're not going to sell our chips to China? I don't know where I fall on that because, obviously Nvidia needs to make money and they need to generate business. It's much more easier for Palantir to not sell their software to China versus Nvidia to not sell their chips, even though theoretically, I mean, Nvidia could be like, we don't agree with what China's doing. We're just not going to sell our chips. But, it's an interesting dynamic. Nvidia is an international company. It's not, only rooted for democracy in the West and values like that. So, and there's, a lot of, there's other things in China that use those chips besides the government trying to create these weird products. They have gaming companies, all that stuff. So it's an interesting question, but it's definitely part of the geopolitical tensions we're having, and it's something to look out for as an investor. Google at 119 right now. Let's take a look at Palantir. We've got a minute before the market open. Palantir at 14.53. Palantir did a nice recovery up above $14 yesterday. Did not expect that to happen, but it did well. A lot of signs are pushing to a little bit more of a bullish market over the next couple of weeks from some of the stuff I read, and we'll go through that. But Palantir doing decently. Chips in general should not be dealt with China. They either sell their chips or China copies them and sells them. Nvidia has no inherent obligation to the U.S. That is true. Should a private nuclear company sell nukes to them? That's a good point. I mean, look, it's a little bit hard to kind of fully say it. Sachin, thank you for being here. They did this in December 22 too. Oh yeah, they did. They had the chip bills in December 22. That is correct. All right, so I guess we'll see how that plays out. We got Palantir at 1461. Where's Robinhood? Where's my little precious hood? 1001 pre-market, baby. This one is fun. I did a tweet about this yesterday. Let's see where Robinhood goes, man. I don't know. I think over the next year, it's definitely more than $10. So I've got some options on it. We'll see how it goes from there. Robinhood's doing nice. SoFi down just a little bit, 859 in the pre-markets. Amazon got upgraded to $150 today. Amazon down a little bit in the pre-market. All right, 3, 2, 1. The stock market is open June 28th, 2023, 9:30 a.m. I felt so empty not being able to do that for the last couple days. So I'm happy I'm able to do that. Wake your ass up. Here we go. Markets open. Palantir, 1462, up 0.21% as we open up the market. Robinhood breaking $10, $10.04, up 0.70% as we get into the market. Nvidia blasted to 409, so it was at 404. Now it jumped to 409. So the dip is getting bought on Nvidia. And again, this is something that Tom Lee was talking about. I want to go through his analysis a little bit. Basically, his TLDR was people were saying in 2022 they sold a ton of money, and in 2023 they didn't get into the market early enough. So they're like, when do I get in? And his argument is like, you're not going to get an opportunity to get in. So you gotta just either get in or get out, but it's going to be hard to find that opportunity. Google at 117.95, McDonald's at 291, Oatly, this is a stock that was brought up yesterday at $1.80, Unity at 42.98. Look at that bad boy. Wow. Congratulations to Unity shareholders. This was a stock at 26 that I was actually fully introduced to. I did not initiate a position, but obviously the Apple partnership took them over the edge. Unity doing phenomenally well right now at 42.76. I think Sachin has some options on these, so congrats to Sachin. Roblox at 41. This is another stock Sachin has some options on, so that's great on Roblox. So Nvda, we're doing an episode on this very soon. This is a company that I was listening to a Twitter Spaces yesterday, and basically the people inside of it were like, I'm not even going to be happy until Nvda gets to $136 a share because it is so unbelievably undervalued. Now, are those people just saying nonsense or are they correct? I don't know yet. We're doing some DD, but on Finance Junkies, probably on Sunday, we'll do a very long episode discussing this company. People are saying it's the next Enphase. And if you know the story of Enphase, it was 63 cents and then it ran up to 300. Nvda might be in that same place. Some Enphase executives have bought shares of Nvda as well. Shopify 63, Teladoc at 24, Roku 62, Apple 187, just $1 away from a $3 trillion company, which is pretty insane. That gives me a little bit doubt about what's going on in the market because Apple has nowhere to go but down, in my opinion. I don't think Apple gets to keep going up and get, 195? We're going to just give it $3 trillion without the Vision Pro even being out, but I guess we'll see what happens. Tesla down just a little bit at 249, Enphase at 159, still stuck there. SoFi 861, Amazon 129, S&P 500 434. It was 437 to start the week, so pretty much flat for the week, nothing too crazy. NASDAQ 13,509, it was 13,388 yesterday, so rebuilding from its downside. Open Door. Look, Open Door is very interesting. This was like $1.30 in December. It's at $3.48. So whoever loaded the boat on Open Door, congrats, because you're up more than 100%, which is not bad. You're making money. Spotify 157, C3 AI right back down to 32. It ballooned up to 43 when I think Palantir was at 16, and it went violently back down to $32. Meta at 286. Meta hitting all-time highs over the past couple of days. Snowflake 182. I know people have been asking for my thoughts on the Snowflake partnership with Nvidia. I'm still digging into it, so I will give my thoughts in a future video, but still researching it right now. Look at Coinbase. Wow, $71. This went to 33 a week ago because of the SEC investigation. Wow. And the only reason this is happening is because this Bitcoin ETF is starting to get produced. And as a result of that, I think people are buying up Coinbase because they know transaction volume is going to happen through Coinbase. Wow. That's incredible. Congrats to everyone using Coinbase. That is absolutely incredible. That's huge. Coin going nuts. Yeah, that is huge. That is huge. $10 resistance is tough on Hood. Yeah, I agree. That is very true. Wow. Congrats to Coinbase. Did not expect it to jump up that high as it is, but it's not doing bad. ARK at 43.32, GM at 37. Again, we got Bitcoin at 30,000 and the Qs at $362 right now. Look at Robinhood up at $10.08. So Robinhood breaking through some of that resistance a little bit and going a little bit further from where it was. Not bad. Okay, so I want to share what Tom Lee did say yesterday. Again, Tom Lee is one of those sort of ultra permeable analysts. And one of the things he said yesterday was pretty interesting to me as I was just kind of going through it and understanding a little bit more. So he said, let me just pull it up right here. Wow, he retweeted a lot of stuff since then. All right, here we go. This Twitter dem I received today is a difficult situation facing money. Sold in 2022, lost money. Stayed short in 2023, lost even more money, especially those that were short Nvidia. Now unwilling to go long on equities. My take, if this is a widely held position view, stock market will not give an entry point. And I think he's right about that. I mean, what is an entry point for people that really want to go long? Is it, 400 on the S&P 500? Is it 39, 3,800? Is it 410? You kind of, I mean, trying to time that is pretty difficult. That's not one of the easy ones to time. I mean, you can speculate on individual stocks in regards for timing. Like I think Robinhood, when it went to $9.10 on Monday, or what was it, last week on Friday, that was an easy like time, I guess, to get some of the market or to get some shares. But the overall market, I think, is a little bit harder. I think it's a little bit harder for that to be able to do. And it's not going to be the easiest thing for people to get down. Let me pull up this video and let's take a little bit of some macro analysis from the mainstream and see what they're saying in terms of equities going higher or lower.
Markets right now. For that, we want to bring in Victoria Fernandez, who is Chief Market Strategist at Crossmark Global Investments, and Gunjan Banerjee, who's the lead writer for the Wall Street Journal's live markets coverage, also a CNBC contributor. And Gunjan, let's just talk very quickly about what's been happening with all this optimism that's out there. You think that people are really embracing a bull market here?
Becky, I think the hottest trade out there right now is betting that this bull market is just getting started. We are seeing
I agree
that across the market where people are really piling in. They're piling into stocks, they're piling into options that would pay out if the rally continued. We recently saw call options activity tied to the S&P 500 index hit one of the highest levels on record. Same holds true for many of these tech stocks, these AI stocks. So we're really seeing people embrace this. And I think momentum certainly seems like it's on the market side right now. And people are trying to ride that higher, whether or not they're actually optimistic about the market or not. They want to profit from these short-term gains.
Victoria, you say not so quickly, right? You're a little more concerned?
I am a little bit more concerned, Becky, and I don't deny that we're seeing some positive effects in the market and that people want to take advantage of this. What concerns me is when you look at some of the other elements that historically have said there's going to be a downturn or we're going to have recession. 14 months of declining leading economic indicators at a pace that we have never had without going into recession. Declining M2, rising rates. You look at the consumer and they're still strong, but maybe not as much as they were before. There's a lot of different elements out there, the inverted yield curve, all of these things, liquidity issues. So it tells me that you can still be in the market. We don't want to tell people get out of the market and don't take advantage of what's going on, but I think you have to be cautious when you're doing that. And I think people are. One of the things that tells us that, look at flows into money markets versus equity ETFs. Money market flows have outnumbered 4-1 since last October and 8-1 since March. So I think people are in the market, but they're being a little bit cautious. I think that's probably a good playbook for the second half.
I agree with her as well. If you look at money market funds, she is correct on that data. Now, the question is, if you look at some of the options data, as Gunjani was saying, people are loading up for either Jan 2025 or December 2024, expecting these options to pay out. And the only way these options pay out is if we have a bull market. I mean, like, we don't need like a 2020 bull market. We just need, I mean, there's a lot of people that have pounded $25 leaps. There's a lot of people that have Nvidia 500 strike price. I mean, every sort of major bank upgraded them to around 475, 500. So the question is if this continues, and like, why wouldn't this continue? Okay, what's the bear case? As Google gets downgraded as well. We talked about this last night on Finance Junkies. The reason this wouldn't continue is because two reasons. Number one, consumers don't have enough money to put into the economy. A simple example is student loans. That's going to take off about $18 billion of spending power a month overall nationally. So that's money that's not going into the economy, right? That's going to be a little bit of a headwind on the economy. The second thing is that AI doesn't prove itself to be as innovative in the short term as people think it is, right? So if AI can't increase Google's margins or revenue in the next 5-10 months, it's going to take 5-10 years. Well, that's not going to be good for Google, right? So that's not going to be good for Amazon. So these companies have a lot to prove, to say the least. But I mean, if they get there, then it'll be great. And that's the bull case, right? Like if they actually figure it out, then boom, this market's going to explode. If they don't, then it's going to take some time. Tesla at 252, Apple at 188. It seems like Apple at 190 or 189 is a $3 trillion company. So Apple's the one that makes me scratch my head, man, because I get that Apple's 7.5% of the S&P. I do not think for the life of me Apple deserves this valuation yet. Which is why I think like the pullback on Apple, I have a friend who has a lot of money with JP Morgan Chase, and he has a money manager, and he called me the other day, like a week ago, when Apple was at 181, and his money manager said, hey, we think the market's getting to a top. It's getting really hot. We're going to trim some of your money. And obviously that guy's been trusting the JP Morgan guy for like years. So he's like, yeah, do what you need to do, whatever you think. And it kind of made sense to me as well. I'm like, all right, this guy's making a little bit of sense. But now it's at 188. I don't know if this continues, but if the S&P gets to like 450, 470 by the end of the year, Apple's going to be at 200. I mean, it's just inevitable, right? Unless the market, because I don't know if the market can rally without Apple rallying. That's why it was so funny when they released the Vision Pro, and there was this meme on Twitter where people were like, you guys are laughing, but this is literally what's going to either make or break people's 401ks over the next 30 years. Because it's true. Everyone's 401ks in the S&P. 401k is like a thing that people give in work for those that are international. So like when a little bit of your paycheck, if you work in the United States, is allocated to a 401k. And most of that is the S&P 500, and most of that is Apple. So it's something to think about as they keep going from there. Amit, would you predict $28 on the S&P by the end of the year? On Palantir? Man, if the S&P gets to 28, we'll be in some trouble. That would be a double from here. That would be a $60 billion company. I would say it's unlikely, in my opinion. I wouldn't buy the stock thinking it doubles by the end of the year, especially if growth doesn't increase in Q3, Q2 the way we think it needs to. If it does, then all bets are off the table because AI is like, again, could Palantir have an Nvidia quarter where their guidance is just ridiculous and then they explode? Yeah, but they have to have that type of a quarter. I think it's still too early. I mean, we got to be honest with ourselves. AIP is in the very early infancies of its product roadmap and trajectory for it to actually be out. So I don't think by the end of the year you get 28. I mean, if I had to bet, I wouldn't think. If we can even stay at 14 till the end of the year, and I know that's being conservative, but I'd be very happy because that means that for the entire year we had 100% gain, which is not bad. It's not like some 300, 400% year gain in 1 year that's inevitably going to come down, and it gives people more time to pick up some shares and keep going from there. We got Shopify at $64.89, Apple 188, Tesla 254, Enphase 161, SoFi. Look at SoFi 876. Nice job, SoFi. SoFi trying to get back up to that $9 range. S&P is also up at 435. S&P is up. Truist $30.13. Open Door at 366. Robinhood $10.19. So Robinhood trying to maintain momentum around $10 now, and hopefully close there over the next couple of days. Palantir at 1470 as well. If we get two good earnings and Palantir has never been in the guidance in what I call Big Daddy way, if we test 20 by end of year, we will be lucky. Yeah, if that's a great point, right? If we have good earnings and Palantir doesn't beat guidance in terms of like beating guidance, they beat last time 519 million revenue compared to 506. But if they don't beat and we still go up, and we test 20, that would be the market taking a big bet on Palantir, saying, hey, they're going to figure it out. And we definitely think that the results have been promising. I think the number one metric to prove on, by the way, Powell is talking today. So if he says some crazy thing, then the market might, the market might tank. The number one thing is customer count. What is the customer count going to be in Q2, Q3? Because if Q2, we can have a decent customer count going upwards, we're going to see a little bit of momentum. Even if, earnings are not amazing. But if the customer count doesn't go up as well as it needs to, then it's going to be tough because they need to just acquire those customers right now, even if they're not getting revenue from them, get those guys in the door, and then keeping from there. Okay, let's take a look at Tom Lee talking about inflation coming in lower in the back half of the year, proving a little bit more of his bull case. By the way, oil is getting down there. Let me pull up the oil prices real quick, because this is a big one. If oil prices start to get to 60, right now, they're at 67. If we get oil at 60, 61, 62, inflation is going to start falling like a rock very soon, probably July, August, September, if we get inflation down to 60. Now, if we don't, we'll see. But if that happens, that is just only going to prove Tom Lee's point, and this bull market is not going to stop. Oh, let me pull this back up. Let's see what he has to say.
Bitcoin had its best week since March, and at one point hit its highest level since June of last year. Joining us now is Tom Lee, Fundstrat, a global advisors, co-founder, and a CNBC contributor. And we can talk Bitcoin, but that's not why you're here. In fact, I remember the time when I used to needle you at one point. I wasn't really needling you, but Bitcoin had dropped to about 4,000 from 20,000. And you were here, this well-respected equity analyst, and you said, yeah, I'm sticking with my 20,000 target on Bitcoin. And we, all of us would ask you, why are you getting involved in something so speculative that can hurt your reputation? Of course, it not only went from 4,000 back to 20, but it went to above 60,000.
Yeah.
So, I mean, kudos to you for just doing the work needed to understand that there might really be something to this, which a lot of people have not done to this day. Famous people haven't done. But I want to talk to you about stocks. You have not been that negative this year on equities either.
That's right. I think at the start of this year, a lot of folks thought we were going to have a hard landing and the Fed was going to really be tough on inflation. And we're now at the midpoint. Stocks are up 13%. You know, the Fed's allowed markets to rise, you know, financial conditions to ease. And it looks like we're slipping into an expansion. I think a lot of skeptical folks might be surprised, but you know, when you get to the mid-year and you're up over 10%, 9 out of 10 times you're going to finish the year even stronger. You know, maybe add another 12% in the second half.
Yeah, I mean, so the history.
I don't know where he's getting that 9 out of 10 number, but I think he's overall accurate on that, which is that if you're up 10%, more than 10%, and you know, the S&P has done decently well over the past 6 months, then by the end of the year, you should, like, I think he's correct. You should finish either stronger or at least the same. One quick thing before I continue the video. 2023, I'm going to pull up this chart. 2023 is an election year, is the year after the midterm election year. Every year since 1958, the S&P has rallied on average 33%. The S&P loses on average 15% on a midterm election year in the United States, and they rally 13%, which means they gain net 15%, 33 minus 15, around that range, the next year. 2023 is the year after 2022, which was a midterm election year.
That would be 25%.
The history of look, markets trend, and I also keep pointing out that the S&P is 10% lower than it was a year and a half ago, when I think nominal GDP is up 15% since then, and earnings are higher. So it's not as even though we get stuck in this mode of wow, we're up a lot, we've traded higher under different circumstances.
Well, why did you say that the Fed has let? Okay, so it hasn't tried to stop the stock market, but it hasn't been expansionary, has it?
No, the Fed's running tight monetary policy, but last year at each of these FOMC press conferences, every time Powell was asked about how markets might be rallying, he got very uncomfortable. But as you know, in the last few meetings, when markets rallied on the FOMC rate decision, he didn't push back. And I think it's because inflation is going to set to track lower in the second half. I mean, you know, half of inflation is housing, cars, and energy. It's 55% of the CPI basket. And we know housing's going to flatten out. Used cars are already rolling over, and energy's down. I mean, it would take a lot for everything else to keep inflation above 2.
Well, the narrative is that the pent-up demand for services and experiences with the millennials, that it's, you know, there's not enough plane seats to go around. There's not enough tables at restaurants to go around. There's not enough workers to staff all these things. So they're going to keep asking for.
All right, Powell is speaking. Let's see if he's saying anything kind of crazy. Let's just go up to this and let's see if he's saying anything.
And as a result of your policy being different than all these policies.
What's going on with their mic, bro? Hold on. Let's see another one. Jerome Powell live. Okay. Oh, Meet Kevin's doing it. Should we stream Meet Kevin doing it? Here, we got this one.
Of the Ministry of Finance. Decisions on intervention.
President Lagarde, how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation for you to feel comfortable taking a pause or potentially going the other way.
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered, inflation was, I think the highest reading we had was 10.3. We are now at 6.1 headline. Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy, and
Right now, they are currently in Portugal.
That is visible for people, for the consumers of Europe, but we're also looking at underlying inflation. And on that front, we are not seeing enough tangible evidence of the fact that underlying inflation, particularly the domestic prices, are stabilizing and moving down. So we're looking at as many measurements as we can, because we want to be in sufficiently restrictive territory for long enough so that we are confident that we reach our 2% medium-term target.
Why is it so sticky, Governor Bailey? And why is your inflation rate higher than that of Europe's?
Well, let me distinguish headline and core for a moment. So with headline inflation, I do expect it to come down markedly this year, as we've been expecting for some time. And a lot of that is to do with the fact that the unwind of energy measures in the UK is on a sort of somewhat longer track, so that we will see some quite sort of discrete sort of jumps down in headline inflation in the UK throughout the rest of this year. And indeed, actually, energy prices are now somewhat weaker anyway than we thought they would be even quite recently. So it's core that's the issue, just as Christine has said. Core is much stickier. I think I come back to the labour market again. We have a very, very robust labour market and strong labour market in the UK. One of the striking things about the UK is that the size of the labour force is smaller than it was at the outbreak of COVID. So we have had a shrinkage of the labour force. We're seeing some reversal of that now, but we're still not back to where we were pre-COVID. So that is causing the position in the labour market to be very tight. And I see this when I go around the country talking to firms, because what they say to me very frequently is that their plan is to retain labour as much as they can, even in the event of a downturn, because they've been concerned and it's been difficult to recruit labour. So that's certainly taking place. So I would say there's a backdrop of a very tight labour market going on.
Is it Brexit related also?
I don't think.
All right. So, I mean, if you guys want to watch that, you can. I'm going to take another last look at the charts. But yeah, I mean, look, they're reiterating the same points. They're not saying anything that special. Their argument is we got to get inflation down. The reason he's doing this with the European bankers is because basically Jerome Powell wants to show that the United States is united with all the other countries internationally that are trying to manage inflation and manage expectations, all that type of stuff. And so all of them being together shows a good sign for the global economy getting better. Now, at the end of the day, the United Kingdom's inflation issue is a little bit different than the United States issue. Definitely different than countries like Turkey and et cetera, stuff like that. But it is correct that if every country's inflation problem starts to go down, that is better for every other country. Like if the United States gets to 2% inflation, that will inevitably be good in some level of supply chain for the United Kingdom. Same thing with the UK, right? Because we import, export goods, prices have to go down, all that stuff. The question is, how long will that take to happen? I think that's the thing. And the good thing is, if we're expecting a 2024 bull market, we have another 6 months, or call it 5 months, right? In July, right? We'll have another 5 months to be able to get inflation to come down. Do we not think, literally think about it. Do we not think that in 5 months, inflation will be below 3%? It's at 4% right now. I don't know, man. And see, and again, even in 2022, if you were betting that inflation was here to stay, all right, it was at 9.1. And by the end of 2022, we got down to what, 7? I think, right? 7 or 6 by the end of 2022. Yeah, by starting 2023. I believe so. So you got down 2 percentage points. And so from 4, do we not think we can get it down to 2.9 by December? Especially with all the signs we have of inflation coming down. I think we can. And if that's the case, 2024, we should get the rate cut. And when we get the rate cut, we should start to see some fun and some momentum. I just don't know what the catalyst is for us not to see that. I don't know if there's another pandemic coming or, the market's on its period or something. It's having mood swings, but we should see it. Look at Amazon hitting 130, S&P at 434, SoFi at 882, Robinhood at 1017. I want to share a chart that Arnie just shared on Twitter that I thought was actually a great chart. Remember, retail trading momentum also lets you know that the market is back. And one of the reasons I am at least long Robinhood on my options until 2025 is because I think retail momentum is coming back. And if retail momentum is coming back, Robinhood's going to take off. So retail investor net buying demand, both single name and ETFs for the month of June on track to set a monthly record going back to early 2019. we have been modestly fading this move on both specific single names and lowering our overall net exposure. Look at that. Net buying demand on single name equities and ETFs for retail is the highest on June going back to 2019. Where do you think that's coming from? That's not coming from Charles Schwab. That's not coming from Fidelity. It's not coming from SoFi, and it's not coming from Webull. So, sure, like they may play a role in retail, but most of retail doing that is going to be, if not already, Robinhood. It's just that simple. And if that momentum continues, then we're gonna get this key. We're gonna have this to keep going. That's it. Snowflake did get IL level 4 today. There's another tweet from Arnie. Snowflake achieves U.S. Department of Defense impact level 4 authorization on AWS government cloud. It just goes to show you Palantir achieved IL level 6 in October. So it's one of those things. Let's talk a little bit about the Snowflake Nvidia announcement. I have a couple of thoughts on it. I think here are my things. Most of retail is not on Robinhood. No, I agree. I'm not saying most of retail is on Robinhood. My point is most of what trading individual equities and ETFs will be in a massive bull market will be on Robinhood on a percentage basis. Obviously, if you take the overall number of people, it's not going to be on Robinhood because Robinhood doesn't have as many users. But if you take it as a percentage of retail that are actively trading on that platform, if it's not the most, it is up there, which is all you need for Robinhood to do well. So that's kind of my point. Obviously, Robinhood just has the lowest number of users in comparison to every brokerage firm. The Snowflake Nvidia stuff. So I think that I think there's a couple of things. Number one, it seems like what Snowflake's doing with this partnership with Nvidia is trying to figure out how do they develop a product, not that they have a product. So when we look at something like AIP, that product's out there into the world, and that the only reason a product can be out there into the world and you can do a whole conference on it and invite Cisco and JD Power and all these big companies is if you have the internal innovative dynamics as a product first company, not a sales first company, but a product first company, to get a product not only out of the door, and think of what it means to get a product out the door. You got to get the UI, the design, the back end, the architecture, the front end, the this, that. All you got to connect it to all the Foundry and ontology, and allow customer data to be segmented into it. You got to do so much stuff. They did it within 4 to 5 months, and then they put on a conference about the product and how the product is being sold in the real world. Snowflake's argument, and I don't think it will be a bad partnership, but the partnership was we're going to work on trying to develop this use case for LLMs. I don't know if that's enough. I don't know if that's enough in the context of what they're trying to do. Now, the reason NVIDIA partnered with them is because Snowflake has 8,000 customers. So obviously, if you come up with some product pretty quickly and you're Snowflake, you can sell it, because you have a massive customer base. You have massive distribution. The question simply becomes, what are you selling? Is it actually transformational? How does NVIDIA play a role in this? Because think of why Palantir didn't have to partner with NVIDIA or AMD. NVIDIA, Palantir didn't have to partner with any type of AI company. Palantir is the AI company, which goes to show Snowflake not only acquiring Nvidia a month ago and then partnering with NVIDIA. Two of these things to me proves that they are not a generative AI company or don't have the capacity to become a generative AI company immediately. Whereas Palantir did that kind of overnight because for the past 20 years, they've been a generative AI company, even though, we didn't know what LLMs were in the way that we know them today. If that's the case, look, this partnership can go well for Snowflake. To me, it's just a question now. Snowflake is up 7% at $190. You're paying $62 billion for this company. I just don't know. It does 2.1 billion in revenue. Growth, they have said, is going to come down a little bit for full year guidance. I just don't know if 62 billion is worth a share of Snowflake. And by the way, Palantir, look at Palantir rallying up to 15. I don't know if 31 billion is worth a share of Palantir. So it's not just a Snowflake thing. But what I do understand about Palantir is they have a product that's already on the market and it's starting to gain traction with consumers, whereas Snowflake is developing some type of application for LLMs in partnership with NVIDIA, which could be successful. Again, it could very much be successful. I just don't think it gives me the same level of commitment or conviction as I have when I see something like a Palantir that put on an entire conference showcasing the use of the product within 2 months after announcing it in April. Just in terms of speed of exit, you can say the sales sucks and the go-to-market sucks, but in terms of their ability to get a product into the world, I don't know if it sucks. I'm choosing to be here over Meet Kevin and JPow. That says a lot about the value and entertainment you provide. Bay Ray, I appreciate that, man. That means a lot to me. Yeah, I didn't want to stream JPow because anyone can watch JPow, right? There's not too much In Kevin's defense, he's probably been talking for like 2 hours and he needs a break. And so he's like, all right, J-Pal, take it away. And he's probably finally getting to catch his breath. That man works his ass off, man. He's an absolute inspiration. He works his butt and he's so smart. He's a smart. I don't agree with him on everything, but he is absolutely one of the smartest guys on YouTube, in my opinion. So all love to Kevin. Snowflake is Fugazi. See, I don't know if Snowflake's Fugazi. I just like, is it just me or does this feel weird, bro? That they're doing a partnership. Like Palantir didn't need to partner with AMD. They didn't need to go find some generative AI company that is up at $1 trillion of market cap and say, hey, can you partner with us and throw on a conference so we can show our customers that we're the real deal when it comes to AI? Like, here's the other thing. Building out AI infrastructure is not easy. I mean, Karp has been saying this for a very long time. And if you can't properly implement that for a client in a way that has guardrails and protect security and all that stuff, and then actually deliver a good product service on top of that, they're not going to stay with that product, which is, Snowflake spends 70% of its revenue on sales and marketing. Palantir really doesn't need to do that. Now, granted, Palantir is not growing as much, but then Palantir is only half the market cap of a Snowflake. And there's a little bit more room to grow, I think, for Palantir to get into that Snowflake valuation, another, $30 billion. And they're actually providing a product that has valuable services, and they don't need to partner with Nvidia to show it off. Like, I don't even know what, and again, this is a little bit of my own ignorance, but I don't even know how Nvidia plays a role in this, because unless Nvidia is building you the AI software, which I feel like Snowflake should be doing that because they're a software company, Nvidia does chips. I'm not sure. Like, was this just a conference to a little bit of hoorah of like, hey, here's Jensen Huang. AI is everything he knows, so we're going to talk about it. Like, I just don't get it. I don't know what exactly Nvidia is doing there and why you need their name. But again, I could be wrong on that. I probably got to do some research. It's just top level. That is a hard thing to understand. Basically, we want the companies using Palantir to be outperforming those that went well with inferior competition, 100%. And I mean, the BP example is very obvious here, right? When BP said from $14 to $6 a barrel, like, they're not using Snowflake to do that shit. And I haven't heard any example of an oil company that used Snowflake to digitally transform their business to save $8 per barrel on oil. I haven't seen that. And so that's where, you've got something like a real value proposition for Palantir. Free 30-day Snowflake trial when you buy a chip. Oh my God, that's hilarious. I love it. Man, I woke up late, time to catch up. Brandon, enjoy the catch up. Luke says, lady I was supposed to train today is an hour late. Luke, what do you do? Are you a physical trainer? Are you at the gym? Or you do something else? Chris could tell you about the Snow partnership. He'll tell you the exact bottom of the stock. I don't even think Chris fully understands the Snow partnership either yet. He's probably still looking into it, right? So I think there's a lot to kind of go into, but I'm digging into it, and I'll go a little more deeper, and I'll go from there. Samuel, good morning. All right, that's it for me, everybody. Exxon was using Snowflake, still uses it, but failed to run several use cases on it. Now moved on to Palantir. Yeah, I did an article on Daily Palantir about ExxonMobil. Let me actually link that right here for those that want to read that. Exxon and Palantir. This proves the point, man. I don't know exactly how this is going to work out for Snowflake and Nvidia, but let's see if they do it. I'm a physical trainer, but I do sales and marketing right now. Okay, I love it. All right, thank you, everybody. I appreciate you guys, 366 people, for being here. We'll be back tomorrow. I have a couple videos on Palantir coming out later today, and then we'll have Finance Junkies again later tonight. Oh, I will be on Farzad's channel today. Farzad's channel. You guys have to make sure you're there. It would mean a lot. Let me just link his channel real quick. I'll be on at 3 p.m. Eastern, 2 p.m. Central Time. 3 p.m. Eastern, 2 p.m. Central Time. I'm sure he'll be asking me about Palantir and my startup and Tesla and all that good stuff. So I'll be there with him. We'll be discussing live in front of his audience, and we'll go from there. All right. That's it. If Enphase uses Palantir, Vitaly and Carlos might cry. That might happen. All right, everybody. Thanks so much. I appreciate you guys. I will see you a little bit later today. Have a great day, everyone.